DeFi by Design, where we talk all things blockchain and cryptocurrency while striving to educate, empower, and enrich.
What is going on? Hi, Rollers, GM, Rollup Nation. Welcome back. This is episode 106 of the DeFi by Design podcast. Today we're talking to Danielle. I hope I'm pronouncing that right. There's a J in there.
I think it's best if you ignore it. Just do the US version. Daniel
Cool.
Day-Lewis or whatever.
Daniel Day-Lewis. Yeah, man. So yeah, Daniel, welcome to the podcast today. It's an absolute pleasure to have you on. And I also want to take this time to announce the partnership between Overtime and the Rollup. So you guys are going to see a lot more content about Overtime and about this concept known as SportsFi. I think we're trying to separate it from 𝗵𝗶𝗴𝗵, which we can get into on the podcast a little bit. And you guys are born out of the synthetics ecosystem. My understanding is that 𝗵𝗵𝗏 is the synthetic token protocol, and then Overtime takes this synthetic token infrastructure and builds a front end and a sports finance experience for sports fans. So it's really cool to see like DeFi tech kind of break into the mainstream with sports and entertainment. This is episode 106. It's an absolute pleasure to be here chatting with you. And how you feeling today?
Great. That was an amazing intro. You did kind of made an overall intro, so I don't know what's left for me, but yeah, thanks for that.
Cool, man. Well, yeah, maybe we can get started just by talking about like your origin story. Like, how did you get started in the space? Where were you before, and then how did you come into where you are now?
Sounds great. I mostly identify as just being a developer or a software engineer. I've been at it for like more than 15 years. Been doing a lots of Java, corporate Java, which was quite boring, but I find excitement in anything I do, and I always aim for, I'm very competitive, I guess is what I'm saying. So and then around 2017, I guess, maybe I wasn't the first wave of crypto OGs, but I definitely wasn't the second. I started trading a little bit, Bitcoin, Ethereum, and all the ICO scams and etc. And somehow I found synthetics or Haven at the time, and that kind of clicked for me, especially community-wise. I got really engaged in synthetics Discord, which was the place to be back in, I think, 2018 or so. I've met all the great people and OGs, many of which are now retired. And yeah, I got very attracted to the space, and I wanted to kind of contribute. And I was wondering how I can do that, because Java actually isn't something you use in Web3, at least not to my knowledge. So I started poking around, and I figured out maybe I get started doing some Discord bots. And that kind of clicked. So in synthetics, there was this thing called like a grants, SNX grants DAO, and I made some proposals to do some Discord bots. And I think now whenever you go into a certain Discord, on the right-hand side, you see all those price bots and lots of bots. But back in 2018, there weren't none per se. So I was one of the first that did them, and kind of maybe not started the trend, but yeah, I was known as the bot master for a while. And having built my reputation as a bot master, I had the chance to meet Kane and Jordan and JJ and all the founders of Synthetics at the time. And as Synthetics rolled out this product called Binary Options, soon after they made a request for proposal, as you would call it in corporate world, like who wants to take this on and spin it up as a separate project DAO and give it all the love it deserves. I've made the pitch, and luckily they chose us. So that would be the origin story of 𝗬𝗪𝗪. We branded it 𝗬𝗪𝗪, and we are talking here about March 2021, so like 2.5 years ago. And we started as a binary options protocol and just peer-to-peer order book trading of binary options, and then slowly started scaling towards this AMM approach, which I think is much more superior. And we were lucky that the L2s kind of were brought to life, and we could deploy on Optimism and save a lot on gas prices on both deployments and just user costs. But we were always kind of attracted towards sports and exotic options. So when finally we found the missing link, which pun intended was Chainlink deploying Sports Oracle, sports odds onto chain and everything, we figured out, let's use everything we have, which are binary options contracts, and let's try to apply that to sports. And we figured out how to do it contract wise, and released over time. We recently had our 1-year anniversary. And yeah, maybe I jumped the gun with the intro there, so I'm gonna stop briefly and let you
I think that's great. I think that's great. Like you told the story about like your involvement as a bot master in the Synthetics Discord, which is really cool to like see how you're like, like it's like community grown, right? Like that's exactly what I think a DAO is looking to do, is like foster a space for people to come in, do what they do best, like you did with JavaScript and connecting that to Web3, and then kind of like let their community members autonomously continue, develop and spin new projects up, as you did with Thales. So before we get into overtime, maybe we could start like build a little bit more of the foundation of Thales. So core, this is a binary options protocol. Why was it a natural, next step to take it into sports?
Well, part of it is definitely our, let's say, just being huge sports fans. So kind of linking what you love with what you do, right? Make work a pleasure. But like binary options are a sort of betting. We stray away from that word, but I think for simplicity, I have to use it. You just binary options, it's kind of a derivative. So you are speculating on crypto prices. But I'm a huge sports fan and sports betting fan, and I kind of really always wanted to do more than just lose, right? Just getting wrecked. So yeah, well, this opportunity was kind of there from the start. And as I said, when we figured out the missing link, which was how to do like a decentralized way of figuring out odds, we didn't want to have like market makers and order book trading. I'm not going to say that's not the Web3 approach, but I do think it's very difficult to scale that in a decentralized way without relying on centralized, whale market makers. So yeah, as we figured that out, we were very excited to start building. And since overtime was released and what it is today, like we are talking lots of cool new things and continuously adding new features, new market types, new sports, and etc.
What has been kind of the traction? Like, what is the volume? Like, how many users? What does that look like?
The volume, we're talking about 15 million net volume to date. We have a lot of large users, to be honest. In terms of distinct daily users, I have to be honest and say that it's not where we want it to be right now. But I think that's a general problem with DeFi and everything, and we are working very hard on making the UX and on-ramping much more easier to grasp and approach more users, get that mass adoption that we're all hopeful for. And with that in mind, we are very eager to work on the new account abstraction integration. Just recently, we had a third-party protocol launch a Telegram bot, something like Unibot, I would say, using overtime in the background, so allowing users to use their Telegram clients to bet on sports. Yeah, so and that's what we are aiming to do, I would say. Besides being a front end ourselves, we are eager to build this liquidity layer of Web3 and be the dominant Web3 sports book and liquidity provider, and have other protocol clients, even Web2 clients, if you will, just build on top of it and leverage Overtime's liquidity to provide a sports book experience.
Awesome. And that one of the things I love most about like this sports finance niche is that it's like a Trojan horse for blockchain into Web 2. And the sports betting industry is massive, right? Almost after regular finance, I would say sports betting and sports finance is is another like billion-dollar industry. So you're able to kind of introduce blockchain and decentralization into another economy, if you will, that's almost a little bit more degen by nature. So ideally, they're a little bit more accepting of this technology, and they, you know, might recognize the benefits, whereas it might take a corporate bureaucracy a little bit more time to accept the peer-to-peer nature of this technology.
Like 100%. I think everything we had in previous DeFi summer was kind of cool, but still very abstract for more users. Now we are finally bringing something tangible. We are leveraging smart contracts and the trustless concepts for what it was meant to be. And we're bringing this to users who can easily hook into, you know, something they recognize. And especially with sports betting, I feel the trustless part is very important. You might have not had the experience, but I know that a lot of people don't appreciate when they get denied their payouts or winnings, or they get banned from using. And, you know, in lots of parts of the world, you cannot permissionlessly access sports betting in any aspect. So I think it's, well, maybe not, you know, the first, but it's one of the first actual use cases where smart contracts can demonstrate how something can improve multi-billion Web2 industry.
Yeah, I think this is finally like it's an application that is appealing to the masses, because how many DeFi, you know, money Legos can we build? Like there's still a wall between people's understanding of Ethereum, and like a distrust, and like, you know, when they think about crypto and they think about blockchain, it's like, all right, if you're not really in it now, you're not really going to understand it or want to learn about it. But if it's happening in the background, and it means that you're not going to be denied your payout, and you can make bets with almost any size, then now you're speaking the language of people in that sports betting world without saying the words blockchain, without saying the words crypto. It's like these are words they understand, and it moves the needle for them because it gives them an advantage, whereas their Web2 trusted sportsbook is not giving them that advantage. So I still want to hit on like some of the more like innovative aspects that you guys are building. Yeah. You mentioned account abstraction. I think that's huge. Even at, I don't know if you were at /ETHCC this past year, Vitalik gave his kind of like keynote presentation about account abstraction. And this is something that is very like important to Web2 users. So, right, because sports bettors don't necessarily have MetaMask and understand how to switch between networks. So how is account abstraction, like what type of account abstraction are you guys developing? How do you see that fitting into the link between the Web3 world and the Web2 world?
So we are relying on third-party providers who are focused solely on account abstraction. I do think that's the best approach, because you want to decentralize even on those aspects of not having to, you know. So we are very determined to do this, let's say, the Web3 way, which is getting continuously harder, especially with the latest trends of, you know, roll bits and whatnot, you know, spinning out and being very successful and still being very decentralized. Being very centralized. But we are determined to do this the right way, the way I was taught back in the early days of Synthetix Discord by Kane and the bunch, which is we don't want any control or custody over user funds. We guarantee payouts with 100% solvency on chain, which I don't think any other even Web3 sportsbook does. And we do that even for parlays. So even parlays where you have like whatever 69x leverage, they are all 100% solvent on chain. And that's definitely unique in this space. So to get back on the account abstraction part, I think it's very exciting to be able to use your Google account, or, you know, there's no limit in what you can use, but it will help a lot to, like, the biggest friction point. Let's say I want to onboard my friends. You know, I've got a lot of friends, all are excited to hear about it. The first step where you have to explain them to install MetaMask, you know, create a wallet, deposit, you're losing them somewhere along the way. And even if, let's say, you do all that, and then you let them loose, kind of now you can use it. They're probably gonna get scammed within like 1 month because they still lack the fundamental understanding of how to protect their private key and how to, protect themselves against all the scam links of unlimited allowances, etc. So I do feel account abstraction and just letting users use DeFi as you said it without having the complexity or even necessarily knowing what's going on underneath, but knowing that they are that this trustless factor plays in. Yeah, I think that's the way to go. And we're talking here about gasless transactions, just simplicity at its finest, using your Google account to do whatever you want to do now and can do it with the 𝗿𝗏𝗻𝗀 dApp.
Very cool. And I think this is intertwined with the other aspect that you mentioned is coming out soon, which is a third-party Telegram integration for sending orders into the overtime liquidity market. How do you view this connection with the market? Like, you guys have liquidity, and there's other front ends in addition to the overtime front end that are sending order flow into the exchange. Like, what is your mental model for integrating like business integrations with the Web3 market and the Web2 sports market as well?
Yeah, that's exactly. We are kind of, well, I wouldn't say pivoting, but the long-term play here is to be a white labeling solution, if you will, where we provide, and not just provide the odds, but provide the liquidity. So like you have zero risks as a third-party integrator, and you can capture a referral fee that's already baked into the contract. So if you are creating, let's say you would create now a front end on top of overtime, you could capture a fee from every trade that happens through your front end. And that's just already baked into the contracts, but you can always add your own fees, because what we always aim to continuously improve is have higher liquidity and lower spreads, so that the odds are on par with, if you will, Pinnacle at this point, and definitely the best in the Web3 world.
Describe Pinnacle for anyone like who's listening who isn't understand. Maybe they know, they're familiar with sports betting, but not so much kind of like the ins and outs. What is Pinnacle?
I wouldn't be able to describe its history or inception, but Pinnacle is known to be the sharpest sportbook out there. So with the best odds, best liquidity, and just smallest spread. So it's always the example people use to compare odds against.
Got it. So the idea of overtime is to be the pinnacle of Web3. So decentralized, peer-to-peer, trustless, non-custodial liquidity, and the sharpest odds out there.
Exactly.
Tightest spreads.
Exactly.
Okay. Got it. And then how are how are Barstool Sportsbook, FanDuel, DraftKings, ESPN is launching their own sportsbook I saw last week. How do those sportsbooks interact with Pinnacle?
I'm not sure that they do per se, but they probably do, because Pinnacle has the sharpest odds makers out there. I do think it's not completely transparent, as everything in Web2 isn't, right? So I'd say they probably use Pinnacle as a reference point, as the starting odds, and just build from there. And no one can beat Pinnacle in terms of the odds sharpness and just how tight their spreads are. So that's definitely the route for everyone, let's say.
I don't want to make this podcast about Pinnacle.
Yeah.
So this is my last question there. Like, what makes them so sharp?
Yeah. So I again, not that they are that transparent, but besides paying the sharpest minds who I think a lot of people who are working for Pinnacle started by being on the betting side of Pinnacle and have proven to be profitable, which tells Pinnacle, okay, so something we don't, it's better for us to hire you, right? And have you make the odds instead. That's one part of their success. The other is that they have the highest traction. So when they release the odds, millions, if not billions of money, like if we are talking Super Bowl, the odds are going to get rebalanced straight away, but by the sharp money. And they have this leverage. And when we get to that point that we have such traction and such volume that we can just publish odds and have them arbed straight away, I'd say we have been very successful.
Yeah, and that's what product market fit looks like in this case. Awesome. And maybe we can talk more about that rebalancing and that arbitrage, because it's something that I found fascinating. Like, I started off, I actually found Bitcoin by playing poker in high school. Anyway, like, so it was something that fascinated me right away. It was like, when these sports books are taking money for games, maybe all the money comes on one side of the line, and then the sports book has to go find somewhere to lay off that action, right? Or get money on the other side so that they can rebalance and just take the spread in the middle. So how are sports books finding other operators or other liquidity providers to take the other sides of these bets? Is there like yeah, go ahead.
Yeah, I think, well, I'm not sure what Web2 books do, but like what we do is, if everyone's taking one side, you continuously make that side less attractive or more expensive, depends how you look at it, and you make the other side more profitable. So you have captured already some of the fees or the spread, and you have this luxury of giving a much better payout on the other side, which automatically attracts users to the other side, and you let users arb the market. And the users, if they see that, let's say the Super Bowl, and whoever is playing, I'm not an NFL expert, but you make the odds, let's say if there were 50-50, you give a much better payout on the other side, and then they find maybe Pinnacle or whatever other sports book, it could be Web2 or Web3, and they make bets on both, like taking the opposite teams, and no matter what happens, they will be winning, which is the nature of arbitrage. So that's how you get the rebalancing without having to do anything yourself as a house. You let the users arbit for you.
So that's almost like the product market fit, the goal for Overtime.
Yeah.
How does Overtime get to that point?
It's already happening to some extent, but to get much more volume, you actually have to keep improving the odds, make them sharper. And the sharper the odds, the smaller your spread is, the more arbitrage you are prone to have with other books. And then you can leverage some of this multi-billion industry and all this money that's going through sports market, and some of it is bound to find you because you're offering just arbitrage opportunities. And ultimately, I think that's relatively easy to tap into, and we're already headed that way right now.
Got it. So let me make sure I understand. You're saying that all things being equal, like liquidity, user experience, convenience, all that being equal, the money will flow to where the sharpest odds are.
100%.
Wherever the price is, the user can get the best price. That's where they're going to go. So
100%, yeah.
If it doesn't matter if it's Overtime, DraftKings, FanDuel, Barstool, right? Wherever I can get the best price for the Patriots, I'm going to go to the sports book where I can get the best price.
Definitely. It might not be you personally, but you would get it maybe on FanDuel or wherever, but that you would create this arbitrage opportunity for someone to find Overtime. So like volume is bound to flow, which is an argument to actually always continue to make your odds sharper and even reduce your margin, because you'll get more volume out of the box. So it could create for interesting dynamics for sure.
Yeah, it does. It leads me to believe that the rich become richer, because when your volume is higher, you can make sharper odds, and then when you make sharper odds, you can get more volume, and then it's a growing cycle.
It's a flywheel that might get us to being the most dominant liquidity layer in Web3. And also our tech kind of plays into it. I already said that we guarantee 100% solvency that no one else does. But the reason this Telegram bot only took like 3 days to create an integration is that we've made everything very modular, very decentralized. Our architecture is very easy to tap into. It's 100% transparent, open source. So like all the decentralization, everything, the guiding points that we need to all use. So yeah, I think that will also help, just having more and more third-party integrators tap into and offer a better UX to users.
Yeah.
Or not better
What
per
is
se, but just different, I guess.
Yeah, I can imagine like many different like fantasy or like sports finance applications that can build on top of this liquidity layer. And then what does an ideal integration look like to Overtime?
What I would like to see is actually a Web2 provider integrating Overtime, which would mean that the Web2 provider handles all the regulation that it needs to handle, gets the license, creates a front end, creates a mobile application, creates a fiat credit card on-ramp for users, because I'm not sure even with user abstraction, that part is going to be a bit difficult. But there is no reason. I'm even thinking of doing it myself. Set up a company, an entity wherever, get a license from all those countries that are relatively easy to get a license from for gaming, and then allow users to use a sports book where you actually collateralize every position by using Overtime in the background. And as I said, there's incentive for someone to do that because there are out of the box referrals that you can capture, which is currently 0.5% of every trade, which would be like 5 cents on the dollar, right?
Mm-hmm.
Or
Yeah.
0.5.
Or it would be
0.5. Yeah.
Cent, right?
Yeah. But I mean, if you're talking millions, that kind of starts growing, and you can add, because of, as I was saying, we have tight spreads. We try to provide sharp odds. You can add your own spread to it, and what I'm saying is you have zero risks and you can capture profit by doing this. I guess the only, not risk, but the only investment is just starting this company and your own time, of course.
Right. Interesting. And the Web2 sports books already have the users. They already have all of the order flowing into their book. This is providing them a more liquid exchange for their users to counterparty their orders with.
Exactly. I mean, but there are sportsbooks that are struggling to capture risks and they become insolvent, and then they get into trouble. This guarantees that you cannot become insolvent. You are not putting any of your money to risk. And maybe arguably for some bigger players, it doesn't make sense at this point because they get large profit by handling all these risks by themselves. But I do think there will be an opportunity, and someone will come up sooner rather than later and say, I want to use Overtime and I want to build a Web2 product, casino, whatever, with all the licenses. But yeah, just use Overtime and blockchain in the background to guarantee solvency. And I think that's when we actually have seen adoption of Web3 and blockchain product into something within Web2 industry.
Yeah, it's the best of both worlds. It's the convenience and the smooth user experience of Web2 with the peer-to-peer, trustless, decentralized efficiency and censorship resistance of Web3. Combining those two means I have this mega application that is both easy and secure. And I think that's massive for the sports finance industry.
Yeah, totally agree.
So switching gears here, like one way that a Web2 company could do that is like fantasy sports, right? Because that's very fun. It's not inherently like monetary. And I think that is where a lot of the users are in like the sports world. Like, so have you seen any like fantasy sports experimentation in the Web3 world?
I've seen a bunch of projects. I think there was one called League DAO that I don't know if it's around anymore. Actually, it's been on my mind as well on how we can integrate more of fantasy. I'm an avid fantasy player as well, but for England Premier League, so not NFL. I also play NBA fantasy, and I do think if we could figure out, but I'm not quite there yet, like brainstorming wise, how we can leverage and integrate fantasy into Overtime besides doing what we're doing right now, which is like engaging our community by sponsoring some fantasy leagues and whatever. But there's definitely opportunity to use the tech in terms of using NFTs, for example, to present every player. I mean, that's kind of an obvious use case, right, for it. Or but when you're talking to you're talking about how to monetize this and how to allow users to maybe, I don't know, bet on fantasy or on outcome. Actually, I have seen for England Premier League, I have seen our local sportsbook offering. I don't know if you played, but they offer how many fantasy points will a certain player score in that game week, and then you can bet, whether it's gonna be more or less. So maybe that's one of the use cases. Yeah.
This is Prize Picks. I watch some YouTube, right? Like Prize Picks is all over the map, and it's just over unders. It's like, will 𝗵𝗂𝗫𝗀𝗀𝗁 score more than 40 points over under, right? And then it's that over under is a binary option, right?
Yeah. We call those player props, and we are definitely releasing those soon. So in time for NFL and NBA season for sure. But I guess what they meant here, because England Premier League fantasy is a bit specific, you can bet on whether a player will have more than, let's say, 5 points, which means he either scores or creates an assist. So it kind of captures both. But yeah, ultimately just relies definitely on player props and just does some combinations with those.
Cool. Yeah, and then if you can have a set of player props, maybe that's your team, and then you can compete against someone else. It would be really cool to do head-to-head matchups.
Yeah.
I don't know exactly how that would look, but I'm a fantasy sports player myself. NFL is coming up, so I've been getting texts, from people. Oh, we're doing our draft soon, and it's like, oh, all right, let's get into it.
Yeah, we are very excited about the NFL season. As I said, we are just preparing to launch player props for the NFL season. We have huge incentives campaigns. So yeah, I think it's going to be huge for our time.
Cool. So zooming out a little bit, for the rest of crypto, the rest of blockchain, what are some of the things in this ecosystem that you are really excited about that are maybe not exactly what Overtime is building or Thales is building? What are some of the other things that you think are really interesting?
I might need to take a moment to think about it. We already touched upon user abstraction. I'm really eager to see that finally released, and if it does what we are hopeful it will do, which it is definitely 10x the user number. I want to say it as a joke, but it will definitely be much easier for me to talk about the things I don't like in this space than the things I like, which I don't know what it says exactly, but yeah, it is what it is. I'm a coder in nutshell, so what I really love is just coding. I love what smart contracts can do, and I love all the tech aspect of it. I'm excited about the 𝗵𝗶𝗴𝗵-4844, which will make L2 transactions 10 to 100 times cheaper, thus allowing us, and Overtime and Thales are really a protocol that leverages smart contracts to a level that has not been seen before in terms of how much complexity we put into smart contracts, which, having said it like that, maybe sounds not so great, but like parlays, for example, when a user creates an 8-leg parlay in Overtime, it actually, the smart contract actually goes and buys 8 individual positions to collateralize that parlay 100%. And this takes up maybe 10 million gas units, which on layer 1, it would be $1,000 for a transaction, but on layer 2 is $1. And we can get that $1 even to 10 cents maybe after this ape is released. But then again, I'm excited about it because that means maybe we can make even more interesting stuff like that,
And maybe you can also, Overtime right now is on Arbitrum and Optimism, yeah?
Yes.
So with L2s, if you want to go ahead and expand.
Yeah, so we are also excited about the base chain. We plan to make a full deployment there and to go strong, building a community and everything. And I think that's a big thing as well. So.
Yeah, multi-chain is huge. One of the things I texted Red before we hopped on was the difference between fat application thesis and fat protocol thesis. And originally I was a believer in fat protocol thesis. I was I thought it was the argument was very laid out. It seemed very intuitive that the value would flow down to the networks because people are paying gas for real estate on the blockchain networks. Recently, my mindset has started to change because we see something like Uniswap. Once Uniswap deploys to a new network, they get all of the volume. For instance, take Avalanche. Avalanche was like, Trader Joe was like the home decentralized exchange on Avalanche. Now Avalanche is like dead and Trader Joe has gone to another chain. It's like the networks and the protocols don't survive. The applications with brand recognition tend to survive. So now I've recently started to shift into the fat application thesis because it's the brands that have the recognition. They are the ones getting fat and the liquidity follows them. So when you're thinking about the next network like Base to deploy over time to, what goes into that? Do you think ultimately over time we'll go multi-chain and incorporate all chains? And have you thought, so maybe we can start there and then we can talk more about the fat application and the fat protocol thesis.
Yeah, I mean, you kind of already made a good point of how the protocols survive the chains many times. I'm definitely not a fan of, and we had this like last DeFi summer with all the Ethereum killers. How many have survived? And now we're having that with L2s, and we're having seemingly L3s, although I'm not, I would argue that those are not actual L3s. I don't think we need hundreds of chains, to be honest, when we are struggling even getting like 100 unique users on the main L2 chains. So I think that's creating, and maybe that's being pushed by a VC narrative or whatever, but I think that's even creating and slowing down the adoption, if you will, per se, by diluting already relatively small user base. But I do think a chain such as Base chain that we all hope would make the on-ramping very easy for lots of users. I do think that's a chain you want to be present on and establish a community and just presence overall from day one if possible. Optimism and Arbitrum, and that's where I think you do need to have a healthy competition between them. They are doing similar things, like being actually decentralized minus the sequencer discussion, but decentralized L2s, and they create this healthy competition where they both try to make the other one better, or actually succeed in making the other one better. But yeah, I don't think we need 15, 20 EVM compatible chains, and we definitely have to make some choices where we want to deploy. But long-term vision, I'd say it would be much better to get to a place where you could still be deployed on one chain solely, but be available on other chains or for users from any chain, which maybe CCIP manages to pull off.
Yeah, I think so. I like when we think about liquidity now, we think about liquidity on Arbitrum or liquidity on Optimism, and in the future, I think we're going towards liquidity on overtime, where it's not really on. It's going to be on Arbitrum or on Optimism or on Base or another chain, but it doesn't really feel like it's separate. It kind of feels like overtime brings it all together. And then there's like a multi-chain router that allows someone from a different chain to deposit so that it can go wherever it's the sharpest, right? Wherever the liquidity is deepest.
And honestly, that's what Synthetix is building. And I think they are making, and Synthetix has been for a while making decisions that are driven by this long-term decentralized vision. And it might have costed them some traction along the way. But when you think about it, that's what the future needs to look like, at least. You use Synthetix, that's one app, one fat app, if you will. And Teleport is already being released, so you can actually, migrate your depth or your SUSD from Optimism to, say, Arbitrum and Base. But no one will actually look at it like TVL on Arbitrum or Base. I mean, maybe some people, but it's actually still just part of Synthetix, and that's it, right? And that's what we want to do as well. But we feel for what we are doing right now, especially with overtime, because we are pushing all of our odds to the blockchain, and that's actually kind of expensive, but you need to be very fast, you need to be very sharp. There are sharks out there who are just waiting for like player injury news to front run the odds. So yeah, with that in mind, the tech isn't quite out there yet for us to still be just on one chain, but be available on other chains. So we have to do native deployments still.
Understood. Makes sense. So maybe before, I still want to give you an opportunity to talk about everything you don't like. Maybe before we do that, maybe we can talk a little bit more about this account abstraction, because I think it fits into the multi-chain thesis, where eventually like the synthetics teleporter is going to open up a multi-chain deployment type of a world. Like how do you guys? You mentioned it's a third party. When I think of account abstraction, maybe others think about it like this. I think about sign in with Ethereum, right next to sign in with Google, sign in with Apple, sign in with Twitter. How do you, is that your kind of like mental model for account abstraction, or do you think there's another approach? What is the right approach when it comes to account abstraction?
It's difficult to say what's right. What I'm hopeful for is that it still maintains all the decentralization values, so that there is no like provider of user abstraction that will hold all the user keys, because I think that will be a step backward as well. But what I imagine it will do, and this is following up on what we just discussed, is a user will be able to sign in, be that Google, whatever, Facebook, or even Ethereum wallet, but and then use overtime or whatever their favorite dApp is, but ultimately not have any idea of which blockchain is being used underneath. And this will eventually make things very easy for us, because while we love all those chains that we mentioned, it's definitely an overhead to manage a deployment and liquidity and dilution in every sense, from like resourcing and attention to users across multiple chains. So yeah, that's what I'm hopeful to see.
And where do the keys, where are they stored, right? Because the user doesn't have the key because it's abstracted away from them. So where does, and there are solutions like account abstraction kind of solutions out there, like Magic, Web3 Auth. There's these solutions out there that they hold the keys. I think they hold the keys. I don't want to put that out there because maybe they have a more complex storage solution. So my question is, like, where in the ideal account abstraction, where are the keys stored?
So my understanding of it is that actually no one holds the key technically, but maybe indirectly, if you're using your Google login, I believe the combination of your email address or just Google authentication creates a unique wallet that can be only yours and no one else's. So out of the box, you own the key because you own your Google account and no one else owns it, apart from maybe Google, if you want to argue that. But yeah, I think that's the way it's intended to be.
Okay. Yeah, this is a conversation that I hope will open up the door to the masses, because people like you said earlier, you told them to install MetaMask and right away they're like, no thanks, Yeah. So I hope that the few users we see, and it's all across, it's not just SportsFi, it's DeFi, it's GameFi, it's all of these industries where blockchain creates a more trustless economy. They don't have the users because the user experience, and especially the onboarding experience, is not quite there.
I mean, people, if you want to get started a little bit on the things they don't like, people so people are now using massively Telegram bots, and kudos to those that created those bots, because they obviously found a great product fit. But I struggle to believe, or however I want to phrase it, that people have zero issues giving private keys of wallets that have non-trivial funds to a database, an SQL database, because let's be honest here, all those Telegram bots, like, they all store your private keys and they have full control of it. Rollbit is seeing massive success, and definitely I'm a little bit jealous, and everyone's thinking like, why isn't overtime seeing the success of Rollup? But like it's nothing else than a Web2 sportsbook that has a crypto on ramp. So like I don't think we even compare. It would be the same to say like, why isn't overtime seeing the success of DraftKings? Well, they've been before like 15 years. They are in the market for like 15 years or whatever, and they have billions. So like give us time and maybe we get there. But it seems like we go through all these cycles, and you hope that people learn some lessons about the red flags and everything, and that the decentralization matter. But something new pops up, or maybe just a few months after the Luna crashes, and people already forget about it, and we are at it all over again. So that's being a bit frustrating for me in this space, definitely.
And FTX, right? Like, let's
Yeah.
not forget SBF is in jail right now. And the same thing that happened to FTX because they custodied user funds could happen to DraftKings. The CEO could go leverage to the gills on all the user funds that are deposited into DraftKings, buy himself mansions in the Bahamas, and now all of a sudden the money that you put into DraftKings is not there because the founder took it into his mansion in the Bahamas.
And we've seen it, like how many times did it happen, right? So, and with banks as well. So that's, I think, the value we are trying to create here, to lose that kind of risk by having everything transparent. I mean, that's what smart contracts were intended to do to begin with. So I still believe that's what they should be used for, and that's what we're enforcing here.
Yeah. I think you're right on the money, bro. I think so. I think it's very important because these black boxes, they can happen in any industry. It can happen in finance. It can happen in sports finance. And anytime that there's money at stake, just look at when they start to run out of money. FTX didn't start to loan out customer funds until Alameda was almost insolvent and they started losing tons of money. What happens when DraftKings, spends all of its money trying to compete with FanDuel? And they go advertise, and they spend all of their money, and then they have to go raise, they have to go generate more revenue. That's when they start to play around with the user funds, right?
Or it's Chapter 11, right? So
yeah,
that's it.
Yeah.
But Chapter 11 never helps the end user, the normal end user per se. So
right, all the founders and the executives still get their bonuses, and the person who put their deposit and trusted DraftKings, they're out of luck because the money's gone. It's in Chapter 11. It's getting paid to lawyers and executives.
Exactly.
Yeah, man. So as we wrap up, about 5 minutes left here. Like, what are some closing thoughts if you have? Anything. Also, we're going to put all the links in the description to Overtime, and we're really thankful for you guys and really excited for this partnership because of all the things that we talked about. I think. And there's so much trust right now in sports finance. I think that there's a lot of decentralization that can take place. So what are you guys, any closing thoughts, like what on your side?
I guess it makes sense to talk about a little bit about the roadmap. We touched about account abstraction. We touched about player props, which have been in great demand. I do want to make kind of a disclaimer there. I think we are one of the fastest paced teams in DeFi. We roll out things quickly with good quality, but it did take us a while to introduce player props because everything is peer to peer. So we are we have to protect the liquidity providers as well, and everything we do requires special consideration. Like when we add a new sport like golf, we have to analyze all the risks. We have to just generate code. So it's different from, again, DraftKings or Rollup, where every new sports market is just a new line of SQL code or whatever. So yeah, player props are coming, and after that we're gonna tackle live betting, which would again be the first in Web3. I'm pretty sure no one has done it, and no one has done it with smart contracts for sure. And I'm hopeful, maybe start of NBA season is a bit optimistic. That's like end of October, but until end of year, I'm really excited to deliver, the first live betting on Web3. And yeah, we already talked about deploying to base chain, and we are very excited to also offer overtime on base chain. So I think, yeah, that's maybe enough in terms of roadmap.
I'll keep going as far as what's available right now. So guys, it's overtimemarkets.xyz. Right now there's soccer, football, baseball, fighting sports, which is MMA, UFC, boxing, tennis, esports, motorsports, and now golf, like you mentioned. So all those sports, I mean, definitely very, very, very sharp odds. Trustless, peer-to-peer, decentralized, and non-custodial, censorship resistant. So you guys are not going to get banned. Like there's deep liquidity, so you guys can make large trades. You're not going to get kicked off the platform for winning. So it's censorship resistant. And right, there's incentives happening. So if you do well and you place volume, you guys have, I think it's 180,000 𝗲𝗟s, 90,000 𝗲𝗲, and 90,000 OP that is up for grabs. And that's extra incentives that you guys can use, whether it's, to offset some of your losses, or if it's just, for having fun on the platform, that's extra bonuses for using overtime.
Yeah, it's plus EV.
Exactly. Deep liquidity, sharp odds, and positive EV. We love it. The last question that we ask everyone that comes on the podcast. If you were stuck in an elevator with anyone and you had to explain what you're building with 𝗲𝗟s and overtime, who would you choose to be stuck in an elevator with, and why?
Wow. So you ask everyone, and everyone has an answer on the spot.
Yeah. So and I'll give you a hint. So the last person that we had on the podcast, it was Swell Network. It's a LS DeFi protocol. He was the first person to say Satoshi. Out of 105 podcasts, it took 105 people to answer that question before someone said Satoshi.
I mean, I'm gonna take the opposite approach and say I would like to meet the Rollup founder and just have a very, very deep argument with him about, how they're, just being toxic for the whole environment, and just ask him when he will rock, basically, and to do it sooner rather than later.
Yeah, for real, man. For real. I mean, we already saw centralized exchanges take the tumble, right, with 3Arrows Capital, FTX, and Luna. I think it's just a matter of time until centralized sports books fall to the same fate. And then maybe just a matter of time before centralized banks fall to the same fate as well. We'll see.
Yeah. That might have a larger impact. So
yeah. So I'm not hoping for that, but who knows? Well, Daniel, it was an absolute pleasure. Thank you for coming on. This was a lot of fun. I feel like I learned a lot, especially from the perspective of like being in Web3 and then onboarding massive Web2 users. I think you guys are doing a great job of introducing blockchain and decentralization to the masses. So thank you for the good work, and please keep it up.
Thank you for having me. It's been a pleasure.
Cheers.
Cheers. Bye-bye.